Speculation is the short-term buying and selling of assets that have a significant risk of loss, but also a significant potential gain. Instead of analyzing an asset's fundamentals, a speculator may trade an asset based on a hunch. It can be difficult to distinguish between speculation and investment. When comparing the two, consider the type of asset, the anticipated holding period, and the amount of leverage used. For example, if Jane buys a single family house in an upscale neighborhood, puts 20% down, and lives in the house for the next 10 years, her purchase would be considered an investment. However, if Jane buys a neglected duplex in a rundown neighborhood, finances the entire purchase, and hopes to sell the property quickly for a 10% profit after giving it a fresh coat of paint, her purchase would be considered speculative. As another example, if Jane is 25 years old and doesn't plan to retire for 40 years, putting a significant percentage of her savings into small cap stocks would be considered investing. While small cap stocks are generally risky investments, they're expected to provide above average returns. The same purchase by Jay, a 64-year-old who hopes to retire and sell the stock within a year, would be considered speculative because it's highly uncertain whether the small cap companies will perform well over the short term.